Hello, Thor's Day. United States of America, her existing home inventory, the amount of houses, what are available to be bought. And it's going dine, dine and dine. Sometime along the way, this must put some sort of a foundation under house prices. Housing prices must stop going down if the inventory is reducing and reducing. Sale and demand, surely. This is from Facebook, from the Californian Corrections Facebook page, and they've got a picture, a photograph of somebody in a Californian corrections institution showing United States flags. And I don't know why. Banks. From the Financial Times, but talking about America, Wells Fargo takes the lead in bank lobbying. This whole lobbying thing, I think, is well strange. Still, Wells Fargo spends more on lobbying from its Washington office than any rival, paying millions of dollars to influence mortgage rules, just as the San Francisco-based lender extends its lead in the market for home loans. Last year, Wells spent $7.8 million on in-house lobbyists, compared with $7.4 million at JP Morgan Chase, a larger bank by assets, according to congressional filings. It's all very official. Citigroup, Bank of America, Goldman Sachs and Morgan Stanley trail in spending, even though most of them have more diverse interests or bigger reputational challenges. Can't anything be done about this lobbying thing? It's just so silly. In the comments, people have been talking about peak oil and what have you. And there's a big argument kicked off in the UK in The Guardian, George Monbiot writing a wishy-washy sort of article, as he normally does, about peak oil and how silly it is. And he kind of quotes something like this as an explanation of why it's so silly. But this is what the people, politicians, let's say, have got to dig, man. They haven't got to dig up the oil. They've got to dig it. They've got to grok it. They've got to understand this sort of thing. Now, just because it's a funny-looking chart, it doesn't mean the information's wrong. So hang on in here. You can see 1850 when we kick off with this oil stuff. And then it whooshes up to where we are about, where they've got 2000 further over. We're now further over on the plateau, on the top of that tit. Yeah. High energy return on the left-hand side. Easy to find and produce, like Saudi Arabia. Just stick a straw in the ground and it glugs out. High quality crude. Well, that's not particularly Saudi, but there's plenty of high quality crude that's just glugged out, mainly in the past. And it's been cheap because it's been so easy to get at. Now, in between here, note the shape of the chart. Where we are now, it's a bit further over from where that greyed out area is, but there's more oil to come than there has been. But there's plenty of oil out there, but it's falling, decreasing energy return, volatile and high prices, expensive to extract, more pollution, higher carbon, from less accessible places and lower quality oil. It's just harder to get at stuff. There's plenty of it. And the anti-peak oilers that say, look, there's gobloads of oil all over the place, like that Harvard study. Everyone knows there's lots of oil, but it's hard to get at, is the main point, and it probably is lower quality oil as well. But the most important thing is just harder to get at. You can't get the flow out, even when you get to it, and even getting to it costs big bucks because it's kind of hidden itself in horribly difficult places. Right, moving on. Again in the comments, just how good was the summit, the last EU summit deal for Ireland? Link to that article in the Financial Times, which has tried to explain it. And it tries to explain it the best it can under the circumstances, and the circumstances are that the last EU summit was a lot of blah blah without much really concrete written down. But if you're interested in that sort of thing, the article is worth reading. Again, from the Financial Times, everyone seems to be going on about French. The French are raising their taxes up. From the Financial Times. This year, including the wealth tax and smaller increase in inheritance and gift taxes, the better off will carry a comfortable majority of the additional €3.4 billion to be raised from households, but rich households. Taxes on business will be raised by €2.9 billion, including a $550 million surcharge on each petroleum stocks held by energy companies and on banks. We won't worry about that. Other hits included an expected 3% tax on company dividends and an increase on taxation of bonuses and stock options. You can see what the politicians have done. What do the public think is bad, and they've taxed it, so they'll get away with it. But will the rich get away? Will they stay and pay this? In the New York Times on the same subject, French raising taxes, or socialist French raising taxes as the headline is, the figures are based on assumptions that the economy will grow 0.3% this year, 1.2% in 2013 and 2% each year after that, which some economists find overly optimistic. So some more balancing is going to have to be done. The auditors urged the government, the French government, to cut spending more than raise taxes, because the latter, raising taxes, hurts economic growth. But Prime Minister Jean-Marc Ayrault insisted that the key to growth was investment, not austerity. Still, spending cuts would seem to be inevitable to meet the 2013 target. For its 2013 to 15 budget, the government said it would reduce operating costs. It promises to balance the budget by 2017. French promises. Ha ha ha. France's government, listen, France's government accounts for 56.6% of gross domestic product. So you get these GDP figures coming in. And for France, consumption would, France, 57% is government spending. Yeah. Wow. One of the highest in the Eurozone. Denmark's bigger, I think. If it is projected to fall to only 56.2% this year and decline slowly after that, and we'll see that when we see it. Talking about austerity, this is Spain's current account balance, imports, exports and all that kind of stuff. When it goes down, right down at the bottom there at -9, just before the bust, they were importing lots and lots and lots of stuff and not exporting much at all. It's bad. And the way to cure it is you absolutely shaft the economy, throw millions of people out of work so they can't afford to buy all those expensive imports anymore. So your current account balance starts balancing out. It is a bit drastic, yes. Leave you with this last photograph of vandalism in London. Is that naughty? They've stuck stickers on the cycle hire bicycles. Terribly naughty. Bye.